Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Netflix reaches an amended all-cash agreement to buy Warner Brothers Discovery's studio and streaming business, aiming to expedite the sale.
Plus, we bring you some of our top tech conversations from the World Economic Forum, CEOs from G42, Anthropic, DeepMind, and many more.
And VC firms continue piling into defense tech. This as geopolitical tensions escalate between the US and Greenland.
And that takes us to the markets, Ed, because the tussle over Greenland, the concerns around further tariffs on Europe and what Europe's reaction to the United States might be has got volatility higher and risk assets lower. We're selling America again. NASDAQ off by 1.2%, having its worst day in over a month. The S&P 500 wipes out its gains for the year, and you're seeing money move into the havens such as gold. Ed, what are you looking at underneath the hood?
I'm looking at Netflix reaching an amended agreement with Warner Brothers Discovery for an all-cash offer to buy the studios and streaming businesses. And remember, the plan is for them to then spin off the legacy networks. And this was the overhang. Paramount's argument was that its bid was superior because of the stock component that had been in Netflix's initial offer. Bloomberg reported last week that this was going to happen, so it's confirmation. That's where the names involved are trading. There's still a lot more to come, of course. Let's get the reaction and analysis to the new offer with Geetha Ranganathan from Bloomberg Intelligence. And you write two things in your research. The first, that this ramps up the pressure on Paramount, Geetha, but also it raises the stakes for Netflix. Let's start with why you think this ramps up the pressure on Paramount.
Yeah, this really ramps up the pressure on Paramount because really the ball is now in their court. They've been arguing for the longest time that the Netflix offer obviously is not that great because it had that stock component. Now, obviously, Netflix making it an all-cash deal. And now really what this hinges on is the value of the cable networks business. So remember, Netflix is only buying the studio and streaming assets. There is still that cable networks business from Warner, which they expect to spin out. And if you read a filing that was put out by Warner today, they have those cable networks valued anywhere from about $1.50, depending on how you value it, per share, going up to as high as about $7 a share. So again, I think they believe that they can actually extract more value if they go ahead and they complete that spin out. So now really this is really kind of up the ante for Paramount. They have to raise their bid significantly, I would think, in order to sway Warner's board.
Either you think $32 is the magic number. Why?
I actually think, so 32 we think is, a starting point to get Warner back to the board. Just kind of looking at the value of the networks, looking at possible, termination fees, financing costs. But really, again, we think that, Warner really looks at its cable networks business. Yes, there is no doubt that this is a declining business. It faces a lot of secular pressure from cord cutting. But at the same time, I mean, they do have some great assets. They have international exposure. They can possibly sell CNN. So they think they can extract a lot of value, which is why we think that Paramount might need to go up to about $34 to fully kind of get on board.
Geetha, again, Netflix adjusting to an all-cash offer in part because its own stock that was part of its initial offer has been under pressure since this all started. We get earnings after the bell. What are you expecting to hear from Netflix, and what do investors need to hear to give them confidence that this is the right path forward?
Yeah, what really investors need to hear is, first of all, I think everybody's looking for really good 4Q numbers, and that should absolutely, Netflix would absolutely deliver on that. But I think the major thing that investors are going to focus on, Ed, is going to be guidance for 2026. The magic number that consensus is looking at is 13% revenue growth. Should Netflix guide to anything lower than that, I think they are going to be in trouble.
Geetha Ranganathan, it's always great to get your take and your analysis, which is so instant when we have this breaking news. We appreciate it from Bloomberg Intelligence. Let's stay with the context of earnings, with where Mag 7 names are, whether they're set, of course, to begin reporting next week, as the big ones like Microsoft, Tesla, Meta kicking things off on Wednesday. But, of course, Netflix is tonight. Tiffany Wade, Columbia Threadneedle, Senior Portfolio Manager, joins us as we are on the cusp of earnings and as geopolitical headwinds seem to just shift the narrative entirely. When you see down days like today, should people making the most of it, buying into weakness?
I think that's the case. The backdrop for stocks still looks very good. Obviously, the headlines over the weekend are creating some volatility, and I'm not surprised to see some selling, just given stocks have been very resilient. But the backdrop for the economy, and I think the market is still very strong. So, yeah, I think this should be an opportunity. And then, earnings coming up will bring the focus back to fundamentals.
Are the fundamentals good?
I think they should be pretty good. Demand, especially, you mentioned the Mag 7 and the hyperscalers. I think we're going to see great numbers out of those companies. Importantly, I think we'll probably continue to see very strong CapEx numbers, which is important for a lot of the tech sector. So I think those should be good indicators for the rest of the market.
The reality right now, Tiffany, is that tech's the big underperformer in the session, right? It's a moment in time, but the S&P 500 has wiped out its gains from 2026. This is escalating, not de-escalating. Where do you expect markets to go from here based on the headlines that have come out from President Trump and what's happening with Greenland?
Yeah, I think we could see some more consolidation, maybe a few points lower in the market. Certainly volatility might lead to additional selling. But again, I think this is a good opportunity. And as we get farther into earnings, I think things will stabilize.
The biggest declines are in the biggest names, some of the Mag 7 names. Is that just general sort of anxiety, geopolitical anxiety, as opposed to some direct read-through where if this tariff threat is enacted, it is those names that are hardest hit?
I think that's fair for today. I think it's just a general selling of the market. We're not seeing additional selling in names that might be hardest hit by the tariffs. We don't have a ton of additional details on what these tariffs might look like. So I think this is just a reflection of broader selling in the market that's hitting the largest names the most today.
Some are getting love. Intel is actually getting love at the start of the year more broadly. We seem to be betting once again, not just on the GPU furor, but also CPU furor and everything around AI. Are they still going to be a winners, and how nuanced do you need to get on name by name?
Yeah, I think we're definitely seeing people try to pick spots outside of the main winners so far. So outside of the NVIDIAs and the Broadcoms, trying to look for other ways to play the AI trade. Intel's been a case of that. We've seen the semiconductor equipment stocks have done well so far to start the year. The memory stocks are also ways that people have tried to play this sort of broadening AI exposure. Intel, I think, is a trickier one because they do still have trouble with their foundry business. But I think there's definitely some other opportunities where investors are looking for other ways to play the AI trade.
Are you looking at other ways to play the AI trade? Like NVIDIA is such an important part of some of the portfolios you run. Should people be expanding, or are there still previous winners going to keep on giving in 2026?
Yeah, I think the fundamentals for NVIDIA are still very good, but I think it makes sense that people are looking for what the next leg of the value trade may be for AI. So we're certainly looking at other parts of tech like the semi-cap equipment companies, but also companies that are involved in the infrastructure build out for AI, so things like electrical equipment.
Tying that all together, please, Tiffany, then, next week is huge. What are the data points that you look for when those biggest technology names have earnings? Of course, we've studied capital expenditure closely, but we're trying to gauge this time, like when does it transition to you guys saying we need to see really big top or bottom line growth to feel confident that this AI thing is real?
Yeah, I think especially for the largest hyperscaler names, we need to see continued acceleration and growth of the cloud businesses. And then we also need to see the CapEx numbers remain stable or higher for the year. And I think those are kind of the two large indicators that we'll be looking at from those companies in particular.
Which of the world's technology companies are you going to be paying most attention to, Tiffany?
I think in the near term, it's the Mag 7 and especially Amazon, Microsoft, Google, and then Meta also, which had a big CapEx announcement last quarter.
So all
interesting to see what they have to say. Yeah,
I mean, we had nice tea leaves already if you're looking at earnings from TSMC, and that's something that you've been looking at, semiconductor equipment manufacturing. How much resilience did you hear from that company, and how much do you just put AI bubble worries to one side?
Yeah, I mean, they commented that they don't think that there's a bubble in AI, that they're seeing a ton of good demand from their customers. And I think that's reflective of the entire ecosystem for AI right now. And that's a great indicator for, again, like you mentioned, the semi-cap equipment names, and also a good indicator of demand we're seeing from memory companies, which are part of the value chain as well.
Tiffany, one of the things that's come back out of Davos is the idea of whether America should or should not allow technology to be exported to China. When you're coming up through the ranks of Bloomberg Television, you kind of learn about China as the engine room of the world economy. And I've always been curious to ask you how much you worry about that. the balance between need to accessing that market and the competitive risks in exporting technology and national security risks to a market like China?
Yeah, I think this is a very tricky one, right? Because we want to keep our dominance in AI and technology and development of new technology, but we also don't want to force China's hand to sort of replicate some of our technologies or develop their own technologies. So keeping them, to some extent dependent on our companies is also an interesting balance to strike. So honestly, this is a very tricky one to figure out.
Tiffany Wade of Columbia Threadneedle, great to have you on Bloomberg Tech. Thank you very much. Now, Bloomberg is in Davos this week, speaking to leaders across finance and tech at the World Economic Forum. Coinbase CEO Brian Armstrong is speaking with Bloomberg's Emily Chang. Listen to this.
About the flight risk concern.
Yeah, so that's certainly one of the core parts of the debate. I think that some of the bank CEOs I've spoken with have kind of said, hey, we have this really high regulatory burden with being a bank, and what you're doing kind of looks like a bank, and so we think it's super unfair. You should have to have a bank license too. And what I tell them is, well, we're not doing something very important that you do. We do not do fractional reserve lending, which means, for those who don't know, at a bank you deposit your funds. They're not keeping your money there. They're actually lending it out and earning interest on that, and then they pay you a very small percentage of that. Like the average savings account makes like 14 basis points or something. And that's called net interest margin, and that's the whole bank business model. And so that's why they have such high regulatory burden, because there can be a run on the bank. Like your money is not all there. In a crypto world, there's a 100% reserve. So all your money is there. It eliminates this entire category of risk around a bank run. No such thing is possible if there's 100% of the money there. And so we don't need a bank license. We're regulated by the SEC, the CFTC. We have a national trust charter. Like there's different entities, and stablecoin issuers can operate under these models as well. And so we've kind of said, we don't need a bank license. That's what currently already exists in the law. The Genius Act even enshrined that further. And so there has to be some other solution here. How do we flip the banks from thinking of this as a threat to an opportunity where we can all go win?
Let's talk about the opportunity. We started off talking about how crypto has had a lot of momentum lately. A lot of that was when crypto was on a tear. The markets have definitely pulled back over the last couple of months. So here, I know this is always your favorite question, but is winter coming?
Well, there's always short-term fluctuations in crypto, but I think, if you look over the last 2 years, Bitcoin's up like 100%. Pretty great outcome for anybody who invested. I've said publicly I think that Bitcoin could hit $1 million by 2030. I still think that's true. So whatever happens in any given week or month, we try not to track it too much. It's the longer term trend that I think is interesting.
So Bitcoin hit an all-time high last year, 125,000. What about 2026? Let's do a shorter term horizon. Where is it going in 2026?
Well, I don't like to make short-term predictions because who knows? It's the market, short-term voting machine, long-term weighing machine, or whatever. So I think I don't think people should be like day trading, unless you really want to do that. I'm more of a buy and hold kind of guy for the long term. And I think that the cool thing about Bitcoin is that it doesn't, unlike fiat currency, there's no money printer, right? So the supply of it is fixed. It's finite.
Coinbase CEO Brian Armstrong there, along with Bloomberg's Emily Chang. You can watch the full Fireside Chat. Just go to Live Go on your Bloomberg terminal. Meanwhile, coming up, we'll bring you our exclusive conversation with Peng Zhao. He's the CEO of G42. We're going to discuss the UAE's role in global AI development. That's next. This is Bloomberg Tech. Back to Davos now, where Bloomberg's Jumana Besetchi sat down with Peng Zhao. He's the CEO of G42. They discussed building AI infrastructure and the UAE's role in the global AI development. They spoke on the sidelines of the World Economic Forum, of course, starting with the chip imports amid existing restrictions. Just take a listen.
In this complex world of AI, nothing is straightforward. But I must say that through the past half a year, since the May summit in Abu Dhabi, we've made tremendous progress.
Yeah.
I'm happy to share with you that the first batch of the most advanced AI chips will be shipped to the UAE probably in the next couple months.
And those are mostly NVIDIA chips?
They are mostly NVIDIA, but we also received the export license for Cerebus chip, which is a company we backed, a startup in California, and also AMD.
Yeah. Did you have to give security assurances to the U.S.?
Absolutely. In fact, it was not just a theoretical pledge. It's something we had to practice for the past 3 years now to physically demonstrate we have the ability to ensure the safety and security of this advanced technologies from the U.S.
i.e. that there's no possibility for that technology to be passed on elsewhere.
Cannot be transshipped.
Yeah.
There's no backdoor for remote access by unapproved parties, so on and so forth.
Yeah.
Yes.
Let me ask you a big picture question, which is the fact that obviously 2025 was a big year for AI just in terms of the mainstream discussion around it. And I think there are pockets of the market where people started to speak up and say, there's so much money going into this space, especially on CapEx investment. It's going to be really difficult to generate a return on investment. Where do you stand in that debate?
I think there are three probably major factors to cause concern or doubt or even fear in this global AI movement. One is that it's clear now, as we discussed earlier, AI has entered our societies. AI is demonstrating it potentially can do many things humans are doing today. So job security is one concern. That's number one. Number two, as we have seen, AI does require so much electricity. Especially in the US, there are such debates already. Can these data centers eventually take power away from people who need it to be left in the cold and have AI consume all the power? This is power concern, number two. Number three really is the concern about a global race. Can we be actually left behind? And what this means for government, for national security. I think all these are factors to cause certain pockets in the US and elsewhere. People are confused, concerned, and asking for a pause. But I think it's a mistake. Because if we pause, say, in the US or the US ecosystem or US allies, many other nations.
That was Peng Shao, CEO of G42, along with Bloomberg's Jemana Besetchi. Staying at Davos, Anthropic CEO Dario Amodei is warning the Trump administration against exporting advanced chips to China, calling it a mistake with serious national security risks. He sat down with Bloomberg editor-in-chief John Micklethwait at Bloomberg House, where the discussion started on the state of China's AI models. Listen to this.
I think they never really caught up that much. So, of course, there was this huge excitement around DeepSeek, right? But, the truth was a couple things. One, those models are very optimized for the benchmarks. It's actually very easy to optimize a model for a finite list of benchmarks. When we go out into the world, right, when we're competing against other companies for enterprise contracts, we see just honestly and candidly, we see Google and we see OpenAI. Every once in a while, we see a couple other U.S. players. I have almost never lost a deal, lost a contract to a Chinese model.
But now you have the Trump administration, and I think you've already protested about this, giving high-speed chips, NVIDIA chips to the Chinese?
That's right. That's right. The thing that is holding them back, and they've said it themselves, the CEOs of these companies say it's the embargo on chips that's holding us back. They explicitly say this. And now, indeed, there are some policies, and I hope they change their mind, to explicitly send not quite our latest generation of chips, although it was reported that even that was being considered, but the generation of chips that's just one back, that's still extremely powerful. And we are many years ahead of China in terms of our ability to make chips. So I think it would be a big mistake to ship these chips. The analogy I thought of, if you think about the incredible national security implications of building models that are essentially cognition, that are essentially intelligence, right? I've called where we're going with this a country of geniuses in a data center, right? So imagine 100 million people smarter than any Nobel Prize winner, and it's going to be under the control of one country or another. So I think this is crazy. I think it's a bit like I don't know, like selling nuclear weapons to North Korea.
Anthropic CEO Dario Amodei there speaking with Bloomberg editor-in-chief John Micklethwait. Coming up, just check out this list of investors backing the new startup, Humans And. We'll find out what's driving the excitement and the huge funding round for a company fresh off the blocks. This is Bloomberg Tech.
Humans And, a new startup building a frontier AI lab, has raised a $480 million seed funding round at a $4.48 billion valuation, an unusually large haul for a young startup. Bloomberg's VC reporter Natasha Mascarenhas joins us now. What is the news here? I mean, is it the seed round or the valuation? What do we need to know?
Yeah, I mean, this is one of the largest seed rounds in private market history. I also like to say this is the new normal for frontier labs. This is 5 top researchers and technologists leaving Anthropic, xAI, Google, coming together and launching, honestly, a competitor to their previous employers in a new way. So to me, the news is that the AI bubble talk is at least, a step back for now, because we are seeing investors back these early companies at very high valuations.
And strategic investors like NVIDIA, for example, what new do we need in a frontier lab right now?
Yeah, so the real question that we have is, what does Humans And really going to launch with? We don't have a really strong idea of what their first product is going to look like, but to me, it's really being set up as the opposite of the set it and forget it agents. It's going to be more collaborative. When I spoke to the company, they said that it's going to be more focused on long-term outcomes for communities and individuals. And to me, that says, maybe there will be a chat interface down the road, but it won't be instant. It might be more focused on memory or collaboration. So what I'm watching is really to see if that's going to be the follow-on that they promised.
We just have 20 seconds, but I guess is the clue in the investors themselves?
I would say NVIDIA coming out as an early investor is all you need to know about how serious they're taking the compute needs of what they're going to do. So that's what I would watch.
Bloomberg's Natasha Mascarenhas. It's a great write-up. Thanks for coming and explaining it today. Meanwhile, coming up, Replit investor. Well, we've known about their funding round of late. Well, Georgian is the key investor in that. Margaret Wu joins us now to talk about her new portfolio company, that's Dominion Dynamics, and why she's getting into defense tech. This is Bloomberg Tech. Welcome back to Bloomberg Tech. A check-in on these markets that are under pressure. Worst day that we've seen in, at least a month. For the Nasdaq 100, we're off by a percentage point. S&P 500 erases all of its annual gains. We are selling off risk assets, whether it's bonds, whether it's the dollar, whether it's Bitcoin as well. We're off by more than 2.6%. Your flight to safety is in gold and metals. Why? Because of geopolitics. Worries about Greenland. Worries about a dial-up in tariff threats going towards Europe and what their response might be. You keep your eyes peeled on what's happening from the focus of geopolitics and President Trump. But move on to some of the individual names that are underneath the hood. Look, it doesn't help the Nasdaq 100 if you're wiping out $150 billion in market capitalization of NVIDIA, having its worst day again in more than a month. But I'm also looking at some companies that still see love. Intel, Wedbush says we think that overall we're going to see earnings better than expected. We're seeing HSBC, Seaport, both saying the CPU side of the equation, the ideas of PCs, also the ramp up in Foundry are looking good. We are up more than 30% year to date for Intel. But I'm looking also at strategy that sells off the worst in a month because Bitcoin's down, crypto's lower, and we're worried about the Banking Senate Committee looking at that market structure deal at the moment. Ed, what do you keep an eye on?
Well, there's a lot of action in private markets as well. Toronto-based venture firm Georgian has led a $15 million funding round in Dominion Dynamics, the firm's first defense tech investment. It comes, as you just said, as interest in Arctic security picks up. Joining us to discuss, Margaret Wu, lead investor at Georgian. Dominion Dynamics is about, for both military and civilian use case, but it's about a sensing network in the Arctic. You have focused as an investor largely on AI. This happens to be your first defense play. Timely, but what's your thesis here in making the play?
Well, You're right. Dominion Dynamics is a company with a vision to become Canada's first defense neoprime. And they're starting by building an Arctic sensing and intelligence network for dual use purposes. Now, our investment in this company really began with a first meeting with the CEO and founder, Elliot Pence. And what really struck me in that meeting was not only the scale and the strategic importance of this market, but the uniquely relevant background that Elliot has to lead in this space, having been an early Anduril employee that helped lead the company's go-to-market expansion into multiple geographies.
We see that alumni effect, that network effect, SpaceX alumni, Anduril alumni, new companies. But in the here and now, when you see the news headlines such that they are about Greenland, I guess that must give you more confidence that this is the right strategy right now.
Oh, absolutely. At Georgian, we see several very strong tailwinds for a company like Dominion. First is that the Canadian government has made it very clear that they have a commitment to increase defense spending from 2% of GDP to 5% over the next 10 years. The Arctic, as you just mentioned, has become an increasingly strategic and critical geography in the geopolitical landscape. And what's interesting is that there are very few technology options for operating in the extreme conditions of the Arctic environment. And Dominion is developing ruggedized devices and equipment to solve this non-trivial problem. And the last thing I'll say is that with the rise of companies like Anduril and Helsing, we're really watching a battle between legacy defense primes and neoprimes play out in the US and Europe. But it's a little bit different in Canada in that we don't have any real legacy defense primes. So there's a white space. And at Georgian, we believe that Dominion is poised to go capture that.
Margaret, there aren't many investors that also have an AI lab. So where will you help a Dominion in that case? Where are you helping your portfolio companies with your own talent that you have?
Right. What makes Georgian different, and we've been investing in AI since 2016, is that we actually have our own internal AI lab of about 20 plus data scientists, ML engineers, DevOps engineers, and cybersecurity professionals that work with our portfolio companies after we invest to accelerate their own product roadmaps. So as AI investors, when we were looking at defense tech in a company like Dominion Dynamics, we really see an industry that is undergoing digital transformation and disruption from AI like many other hardware and labor-intensive industries. Defense is essentially becoming software defined, and there's an increasing emphasis on the concept of connected mass, meaning how do you quickly produce a lot of things, but how do you make sure those things can speak to each other? And that really intersects with what we do at Georgian every day, looking at areas of technology like multimodal AI, physical AI, cybersecurity, and edge computing. So our companies are working on these types of companies, tracking where we believe they are headed and going. And we believe in that sense, we're going to be a great partner for a platform like Dominion, along with our Canadian presence and connectivity.
If you're thinking of you really inherently an AI investor, but now it's focused on defense, look, defense is a hot space, and we know valuations have been high. Another big bet of yours has been Replit, and boy, is that paying off with its scale of its valuation. And the latest, as we understand, they're tripling its valuation to $9 billion. We understand you at Georgian are helping lead that funding round. When is it the right stage to invest? How are you getting comfortable with these valuations?
Well, I can't really comment on a potential transaction, but you're right. We are an existing investor in Replit, and I believe this is a category-defining company at the app generation layer of vibe coding. When you think about some of the lofty valuations that you're seeing, it's really the potential of the market size behind something like Replit and app generation. If software is eating the world, then you should know that vibe coding is eating software, and that process is only accelerating. So we believe this has the potential to be one of the largest markets we've ever seen. And what I find particularly notable about a company like Replit is that its product, with the exceptional growth and millions of users, is still the worst version of itself every single day, because the company is moving with such velocity that new incremental features are coming out almost on a weekly basis. And with every new coding agent launch, the company is making leaps forward towards creating a one-shot, full-stack engineering team and infrastructure to boot.
Margaret, our next guest is a pure play software name in the defense space. But I want to go back to what you just said, software being of value here, and also Dominion wanting to be a neoprime.
Yeah.
Now we know that also software is capital intensive. I just wondered if you could reflect on that, the need to fund growth for these companies, be it talent, access to compute, and software competence. It's still an expensive gig.
Absolutely. I think historically there's been, defense tech has been a harder sector to invest into because of the startup valley of death and the amount of capital required. But with the speed and the productivity that we are seeing with things like vibe coding, we believe companies can move a lot faster in a much more cost-effective way. And that's how you've seen the rise of the neoprimes.
Margaret Wu, what a joy to have you on the show. Thank you very much indeed for joining today. Lead investor at Georgian. Now, let's stick, as Ed says, with the topic of defense. Military software startup Defense Unicorns has become a unicorn itself. Following its latest $136 million funding round, Defense Unicorns CEO Rob Slaughter joins us to talk about the company's plans and how you're able to get the cap table. I mean, you've got Bain's Capital Tech Opportunities Fund there, but you've also got Answer Capital, Sapphire Ventures. I'm looking at Valor Equity Partners. What is it that you tell them you're doing differently, Rob?
Really, it just starts with the problem. I think, obviously, people know and follow the news. Everybody, I think, in this country believes and understands how lethal and effective the U.S. military is. But a lot of that lethality, a lot of that capability was developed over the series of many decades. Meanwhile, the software world has completely reinvented itself over the last couple of years. So really, I think what investors are coming to realize is not only is there a massive need, but there's a massive market. In addition to that, there's this massive change around how the Department of War is open to contracting. So specifically, the Department of War really focuses on cost plus fees. I think that the entire Department of War has reinvented itself, allowing for more fixed price contracting.
You call yourself the air gap software company. So does that get rid of Microsoft entirely? Do you come on and help sure that the Department of War or any of these other military-focused areas of government are able to still use the software providers they do, but you're able to put this layer on top that makes it safe? Where are you solving for?
Yeah, you absolutely nailed it. Most of the entire world is cloud-based. It's all centralized compute. The Department of War, and we believe many companies, many individuals over the next decade or two will actually find the value of these air-gapped systems. And let me define air-gap for you. Air-gap is fully disconnected. That means it really doesn't touch anything. It's semi-disconnected, which means it might touch a few things, or even extremely high firewalls to where you might have access to the internet to certain domains, but you certainly can't go out and reach out to Docker. Right. You currently can't reach out to things like GitHub.
Rob, you had a career in the Air Force focused on technology. 10 years ago, you tried to work with the DoD to change how they approach software. Fast forward to present day, clearly you see an opportunity. Has that changed how the military apparatus views its procurement of software? And how fast are you able to grow your contracts with the defense industrial base?
Yeah, I think it goes back to the need. I think 10 years ago, I don't think people really understood what our adversaries were capable of. I think there was a certain level of, we have the superior tech advantage, and I think objectively speaking, that's changed. And with that need comes a real desire to move quickly. Previously, there was some talk about the valley of death. One way to look at it is there's several valleys of death. You have the valley of death of that first contract. But for a startup like us, you have this valley of death around software integration. And specifically as a company, that's the problem that we solve.
Rob Slaughter, CEO of Defense Unicorns, reaching unicorn status with its latest funding round. Thank you very much. Now, coming up, we're going to go live to Davos for a conversation with UBS CEO Sergio Ermotti. That's next. This is Bloomberg Tech. Let's get out to Davos, where Bloomberg surveillance anchor John Ferro is standing by. John, take it away.
Hey guys, live from Davos, Switzerland, at the World Economic Forum, standing by the king of Swiss banking. He might not like that introduction. It's Sergio Ermotti, the UBS CEO. Sergio, good to see you.
Hi.
Thanks for braving the cold. I appreciate it. Before we get into the bank, we're going to ease into this and start with financial markets. What a start to the trading week stateside. Equities open up, gap lower, bond yields higher, dollar weaker. We've seen this movie before last April, got over it pretty quickly. We've thrown a lot of this market in the last 12 months. It hasn't stuck. Is there something different about the way we're set up for 2026?
Well, I would say that it's probably the accumulation of issues that are now out there and not resolved that is becoming a little bit troubling in my point of view. So I think that this is the only major change. But we have to stay tuned for more volatility going forward and predictability and rapid changes. So I think that staying diversified in financial markets nowadays is pretty important.
And let's get to what that word means, diversify. It feels like that's a diplomatic way of saying sell America sometimes. And I'm not going to put words in your mouth. I'll tell you what others are saying. PIMCO is talking about a multi-year period of diversification away from US assets. We've seen from others moving out of US Treasuries. There was a headline earlier on this morning about a very small Danish pension fund, and they've got their own issues in Denmark right now, given their relationship with America. What are you seeing develop?
Well, diversifying away from America is impossible. I think that in any major asset allocation, one could probably think about having an overweight or underweight, but diversifying away from the US and also from the dollar is a quite dangerous bet. Things can change rapidly, and the U.S. is the strongest economy in the world. The one who has the highest level of innovation. Right now is a little bit bumpy, but I would say that I wouldn't really bet against the U.S.
There seems to be a difference between how the politicians and the policymakers talk about America right now and the backdrop for international relations and how a business person thinks of America, the economy and the opportunity. I've mentioned this stat a number of times already today about the survey that PwC put out. They surveyed 4,500 CEOs and the top destination for capital for investment, America, and it was up on last year. As a bank boss right now, a CEO who's thinking about expanding around the world, why is US still top of mind for you?
Well, because from our standpoint of view, we see two big levers. First of all, wealth creation, GDP growth, innovations, and also more idiosyncratic to UBS is that we see potential for us to become more present, increase our market share. So that's one place. On the other hand, we are also very big in Asia. I mean, we manage 1 trillion of assets there. We are growing very fast. The economy is growing. Half of the population in the world is living there and is creating new wealth.
It sounds like you're on the front foot. At the same time as the bells ring behind me, I'm reminded of where we are, Switzerland, and the issues on the horizon potentially for the bank, and that's capital requirements.
Yeah.
That feels like a cloud that's hanging over this bank right now. How quickly do you think we can resolve it?
Not quickly. I think it's a political process. Most likely, we're going to find out the direction of travel, in the middle of the second quarter, and then it's still a political process. But you're right that this is something that has been quite distracting for us. Although we have been quite successful in managing the integration of Credit Suisse, is almost completed. We are almost 3 months to go, and then the vast majority of the job is done. But we look forward for a resolution also.
I'm sure you do. From the strategic standpoint, how is it holding you back? How is it distracting you? What are you prevented from doing that you would like to do right now?
At this point in time, to be fair, nothing, because executing the integration is the top priority. We cannot be complacent, although 90-85% is done. The last 15% is as important. We still need to take out 3 billion of cost and finalize the restructuring, and then we are prepared for growth, and that's the reason why we are investing top line, but also in efficiencies, AI, and how we can become better and stronger.
Where did the costs come out? Are you satisfied with the size of the workforce? Does more need to be done on that side of things?
Well, there is still, unfortunately, that's the more, a big chunk of the savings are going to come by disconnecting all the IT systems, data centers, but also there is also a painful still part of on the account, but it's within what we always announced. So, I think the direction of travel is set.
This is the top of the to-do list for you, and then someone else is going to step in eventually. You've offered your thoughts about where that someone might come from, that you'd like to see them come from internally, from within the bank. Are you open to someone coming from the outside?
Well, we always need to be open. I think the board is not, my job is to prepare and to present to the board as many candidates possible for internally, and the role of the board is to also evaluate external candidates and find the best solution for the future. But I would say the bank is very strong, my team is very strong, and I do believe that an evolution is what we need. Is probably not a revolution, but it all depends.
What's the timeline for that process now? Can you give us an idea? At what point do you present your ideas about who might succeed you?
Well, we always, every year, I present ideas, succession.
You offer them names?
Succession is not a process that you do, only a few months or years before somebody leaves. Succession is something that we manage every year, from my standpoint of view, we need to be just prepared to have the best person for that moment.
When that person is selected, there is another seat that might open, and it's the chairperson's seat. And I just wonder, when you step aside as CEO, has the chapter truly closed for you and the bank?
Well, look, right now I'm very focused on finishing my job. Honestly, I think this is still very intense activity, and then it's going to be, I need to reflect.
You realize people watching this won't really believe that? Well, you are a human being, you'll be thinking about the future and what comes next.
But people watching, they are not expecting me to respond.
That is true as well, particularly this gentleman right here, who wants that response from you. Just a final question from me. I believe you first took the job as CEO back in 2011. As you look back on things, and I think this is the appropriate time to begin to think about this, your legacy at the bank, I'm not sure you ever really thought that we'd end up here integrating Credit Suisse in the circumstances we did. But how would you like your legacy to be remembered as the leader of UBS?
I was very proud. In a tragic moment for Switzerland and for the banking industry, I was very proud in 2023, when 2 years after I left, that UBS was asked to step in and stabilize and help stabilizing Credit Suisse and being part of the solution. That was for me, almost reaching what I always thought I wanted to show with our transformations in the first period. Right now, I think that we have a solid bank, a stronger bank than before, and I believe we are set for growth. So the legacy is always to see that when you leave, after a couple of years, things are going even better.
Sergio, it's good to see you. Thanks for making time for us.
Thank you.
We'll get you into the ward. That was the UBS CEO, Sergio Ermotti, speaking with Bloomberg Surveillance right here at the World Economic Forum. Guys, I'll throw it back to you.
Extraordinary conversation, as always. We thank you. John Ferro there with Sergio Ermotti of UBS. Now, sticking with Davos and Switzerland, we have Bloomberg's Emily Chang. She sat down earlier with Demis Hassabis, the CEO of DeepMind. Take a listen.
It's been hard work, really hard work getting our technology and the models sort of back to state of the art. I think we did that with Gemini 3 especially, and Nanobun on our imaging software. And then I think we've also sort of adapted really to this new world of shipping very fast, kind of bringing a kind of startup energy to what we do. And
do you think people underestimated Google or got something wrong?
Yes, maybe. I'm not sure. I mean, I think we always had the ingredients, to be at the forefront of this. Obviously, we've got the long history in it. I think, over the last decade, Google and DeepMind, between us, we've invented most of the breakthroughs that the modern AI industry relies on now. Obviously, transformers most famously, but AlphaGo, deep reinforcement learning, these things. And we have these incredible product surfaces, billion of user services that are natural fits for AI, actually, from search to email to Chrome. And but it's just getting all of that together and organized in the right way. And I think we've done that in the last couple of years. And there's still a lot more work to do, but I think we're starting to see the fruits of that.
A year ago, DeepSeek seemed cataclysmic for the West. Now, a year later, it's quiet. China seems to have been quieter.
Yes.
Has your opinion on competition from China changed?
Not really. I mean, I didn't think it was cataclysmic in the first place. I think it was a massive overreaction. In the West, it was impressive. And I think it shows that the Chinese are very capable, the leading companies. I think companies like ByteDance actually, I would say, are the most capable. And they're maybe only 6 months behind, not 1 or 2 years behind the frontier. So I think that's what DeepSeek showed. Some of the claims were over-exaggerated about, the amount of compute they used and being so minimal and so on, because they relied on some Western models and also fine-tuning on the outputs of some of the leading Western models. So it wasn't sort of de novo. And the other thing I think so far is not, yet to be seen is, can China actually, the Chinese companies, innovate beyond the frontier themselves?
That was DeepMind CEO Demis Hassabis there, along with Bloomberg's Emily Chang. And that does it for this edition of Bloomberg Tech. Netflix reporting after the bell. That's kind of the big one we're looking for, both because of what we're waiting on, more information about this amended offer, Caro, for Warner Brothers Discovery to an all-cash deal. But as Geeta Ranganathan of Bloomberg Intelligence put it to us, we want to know what's going to happen in 2026.
Yeah, we want to know if it can deliver on 13% growth in revenue, where they can still hit the levels of $51 billion in revenue per year. Because look, with this all-cash bid, it doesn't drive up their leverage much. It does sure put the pressure on Paramount Skydance as well. So all eyes on that deal, on those earnings. And don't forget to check out our podcast, of course. You can find it on the terminal as well as online on Apple, Spotify and iHeart to just reimagine all the conversations we've been having at Davos. Ed, there's a lot going on this week.
There is an earnings start in earnest. Netflix today, and then we brace for what's to come over the next couple of weeks. This is Bloomberg Tech.